Perfect. Thank you. Good afternoon, ladies and gentlemen. It's my pleasure to provide you with an overview of our company today, TIC Trading Software AG. We specialize in the B2B sector, offering software as a service solutions. And our core service encompasses stock exchange access systems tailored for banks and financial intermediaries. The suite includes advanced trading platforms, comprehensive risk management tools, direct exchange access, as well as robust compliance and reporting solutions. I am Carsten Schölzky, and I have the honor of serving as the CEO of TIC since the beginning of 2020. Currently, our team consists of 35 dedicated professionals, and our fiscal years extends from October 1st to September 30th. Beyond my responsibilities at TIC, I'm also an active member of the expert advisory board at the Düsseldorf Stock Exchange. And prior to joining TIC, I held the position of the CTO at the Hamburg-based fintech company Figo, and was the manager at PayPal, focusing on product development for the German market. Our office is located at Düsseldorf, Germany. And in our last financial year, we processed over 14 billion transactions through our systems. And I'm proud to highlight that our systems maintained an operational ability from exceeding 99.99%. Now let's share me a brief history of our company. TIC was established in 2002. By 2006, we transitioned into a stock corporation, known in German as Aktiengesellschaft or AG. A significant milestone occurred in 2017 when we conducted our IPO. Notably, this IPO was executed without any capital increase, demonstrating our strong financial health and stability. And one of the most distinctive features of our corporate structure is outlined in our Articles of Association. According to this document, we are required to distribute 100% of our distributable net profit to our shareholders. This policy is quite rare in Germany, emphasizing our commitment to returning value to our customers, to our investors. It's important to note that any amendment to this clause requires a 75% majority at the annual general meeting. And given the current share distribution, where no single shareholder owns more than 25% of TIC, a change to this policy is highly improbable. Our key shareholders are HSBC pension funds and a big private investor. Since our inception, we have raised an initial capital of 1 million euro and have distributed 23 million euros in dividends to date. This consistent financial performance and our clear focus on shareholder interests have been pivotal in our successful positioning in the market. We take pride in our ability to deliver solid returns to our investors, reinforcing their trust and confidence in our operations. To give you a clearer picture of how we operate as a company, let me walk through an overview of our services. Each of these services is fully customizable and can be tailored to meet specific needs. I've distilled our offerings into 6 key services, which are displayed on this slide. Let me dive into each one step by step. For institutions with securities business, our TBMX trading suite offers a sophisticated trading platform designed by and for heavy traders. This suite is a popular choice among nearly all of our clients. Now you might wonder what I mean by heavy traders. We categorize heavy traders as day traders who engage in trading far exceeding the typical 50 to 80 orders per day seen in normal or mid-range trading. These heavy traders implement their strategies throughout a single trading day, and sometimes they even hold positions across multiple days. A common trait among them is the execution of large volume of orders, often in varying directions. They require robust functionalities to ensure compliance with regulations, especially in activities like short selling, for example. And they need comprehensive tools to maintain an extensive overview of the market and their portfolios. Additionally, our service caters to liquidity providers, whether they are traditional market makers or serve in a specialized role like the German designated sponsor. Of course, we support both manual and algorithmic trading functionalities in this area. Our white label terminal suite is a streamlined version of our professional trading front end. It is designed to operate seamlessly across a diverse range of platforms, specifically tailored to meet the needs of the more demanding end customers, essentially the clients of our clients. This suite combines simplicity with sophistication, ensuring accessibility without compromising on functionality. The TBMX Risk Suite is an easy-to-connect pre-trade risk management tool that seamlessly integrates with our trading operations. It continuously monitors the entire order flow based on risk parameters that you can configure according to your specific needs. Imagine managing a diverse team of traders. Naturally, some of them are more experienced than others. And with the risk suite, you have the flexibility to tailor trading permissions. For instance, you can set specific restrictions for your junior traders, allowing them to engage in trading activities with reduced risk compared to your more seasoned senior traders. This feature ensures that your trading environment remains safe and controlled, aligning with your overall risk management strategy. Our compliance monitor is a sophisticated post-trade monitoring system designed to scrutinize incoming order flows for any signs of market manipulation. This system adheres to the stringent requirements set forth by European and German regulatory bodies, such as ESMA and BaFin. It is primarily utilized within the compliance departments of our clients to ensure regulatory adherence. Currently, we are in the process of enhancing the compliance monitor to also recognize regulations set by the new German MiCA rules. This update will extend its capabilities to include the trading of cryptocurrencies. Then we have our market data suite. This offers streamlined access across to both domestic and international securities market data. This powerful tool is designed for our customers, primarily banks, who can utilize this data directly or provide it as a valuable resource to their own clients. The suite ensures that all users have the timely and accurate information they need to make informed trading decisions. And then we have all the interfaces. Our interfaces consist of APIs and other connection types that operate without a specific front-end. These interfaces facilitate the seamless transfer of order data and connect to various markets and brokers, allowing comprehensive control over the entire order flow. Rather than requiring an institution or bank to establish connections with each individual marketplace, we provide a single consolidated connection, such as from the core banking system to our platform. This simplifies access, enabling the customer to tap into all available connections through just one gateway. Because banks typically possess ample financial resources, but often lack sufficient project resources. And direct connections to all marketplaces would necessitate continuous project setups for every technical adjustment required by the marketplaces, which occur once or twice a year. By partnering with us, banks can bypass these repetitive and resource-intensive tasks. You can think of our service like a multi-plug adapter. You plug it once, and you instantly gain access to a whole bouquet of connections that you no longer need to manage individually. Additionally, our web service API provides a tailored solution for financial service providers and brokers who seek to develop their own trading platforms. Let's have a look at our customers. We serve a diverse client base that includes over 60 financial intermediaries and banks. While I'm unable to read all our clients today, I can share a few notable examples. You can see here. This includes prestigious institutions like HSBC, UniCredit, Comdirect, and Trade Republic. If you ever traded with these entities, there's a good chance that your transactions were facilitated through our systems. The fact that these well-known financial institutions rely on our solutions is a testament to the quality and efficiency of our products. We take great pride in providing steadfast support to our customers, ensuring their trading activities are conducted smoothly and successfully. Displayed here is the trajectory of our net profits since 2010. I'd like you to draw your attention to the shaded bar representing the 2020-21 financial year. This indicates a special effect due to extraordinary income during this period. Please keep this in mind, as I will come back to it later. In the last two financial years, our net profit experienced fluctuations, primarily due to a significant investment in our software. This investment, initiated in the 21-22 financial year, spans a total of 24 months and affects 3 financial years. Our strategic decision to enhance our software underscores our dedication to innovation and commitment, maintaining long-term competitiveness in the market. While this investment temporarily impacts our net profit, we are confident that it will fortify our market position and foster sustainable growth over the long term. A key aspect of our business model is the stability provided by our revenue structure, with over 90% being recurring. Notably, a third of this recurring revenue is trade dependent, which means it's directly influenced by market volatility. During periods of heightened trading activity, our trade dependent revenues increase. During periods of lower trading activity, our trade dependent revenues decreases. This blend of stable recurring income and responsive trade dependent revenue creates a robust foundation for our financial growth, and our strategy effectively capitalizes on market opportunities while ensuring a solid and predictable revenue stream. And this positions us well for both current and future market conditions. Let's have a look at our share price. The development of the TIC-TS share over the past few years shows various distinctive phases. During the coronavirus period, we recorded an increase in load-dependent revenues, in particular due to the high volatility on the stock markets. The challenging market environments led to increased trading volumes, which had a positive impact on our results. At the same time, there were negative interests in saving accounts that let people go to the share market, and suddenly the typical conscious conservative Germans were recognizing that there is a share market. Additionally, fintechs with easy accessible trading solutions were coming up. In the 2021 financial year, a special market can be seen in the chart, which indicates an extraordinary one-off income that I already mentioned a couple of slides ago. These extraordinary proceeds led to a disproportionately high dividend payout and had a corresponding impact on the share price. Another significant event was the share split that we carried out as part of a capital increase from company funds. The stock split resulted in the number of shares issued doubling from around 1 million to 2 million, and thus also the share price halving. I would like to ask you to take both of these factors into account when analyzing our share price performance. And that's what I wanted to show you today. Thanks for your attention, and now look forward to answer your questions.
Carsten, thank you so much. We already have a couple of questions in the chat. So
yeah, very good.
First of all, if you look at sales over the past few years, you can see there has been a decline, or at least it has been stagnated. And have you lost important customers, and how do you plan to grow in the future?
Yeah, sales is not so easy, especially if we have to handle, if we have to deal with big institutions, with big banks. It takes sometimes years until you get a signed contract with them, or you get a contract signed, but you don't get any real project running. So yes, it's difficult to get new customers, and we're constantly in conversation with new customers. Right now, I'm talking with 2 probably new customers, but I can't really promise when they will be new customers for us. So that's very difficult for our prognosis. And we lost a couple of not so significant smaller customers in the last couple of years. What was not so bad, but it's like the normal fluctuations. We are very stable with our big customers that we have, and we are usually so deep into the system of our customers that it's very difficult for them to get rid of us. But yes, getting new customers is difficult. And maybe one example that probably one or two of the listeners here can recognizing. We announced about 2 years ago strategic partnership, for example, with Baader Bank. But there was just one project we made with them so far, because it's one step to have a partnership, and then another step that might take some time to get the next step with them and making a project with them together. So have some very nice conversations with new opportunities that we have, but I can't promise anything.
Okay. And has the booster program officially concluded as suggested by the annual report, referenced as the beginning of the calendar year? And if not, what are the remaining milestones as criteria for its completion?
So we as TICTS, we finished it, so we are complete. But it's depending on the first customer, the pilot pass customer, when this customer is rolling it out. It's not rolled out yet. If so, then there would be a special announcement for this. I expect the rollouts happening in the next 2 months. But I'm not. But I can't dictate our customer what the timeline is. Right now, he's already in a friends and family phase. So I assume that we will hold the timeline with the next 2 months. But actually, we are with our project, we are already done. Of course, we have some typical support that we do, but the project from our perspective is completed.
Okay. And what are the specific projected costs associated with the booster program for the current financial year 2024-2025? And could you provide detailed breakdowns of the cost?
Of the cost, so I can't break down right now the costs we're expecting for them in the next couple of months and years. It will be kind of invisible in our normal maintenance costs we have, right? And also get paid for. So it's it should be not so much, right? This is just maintaining what we have with all of our services that we have. There might be a little bit coming with when the rollout is completed. Maybe there is a bug or so that the customer will find that we have to fix. But these are all minor things that are not really relevant.
Okay. And is there room for M&A in the future? And what could be potential targets?
I'm always open to M&A. And sometimes I talk to also opportunities there that might be possible for us. Right now, I have no specific targets in this direction. But there are opportunities. No, but if there's opportunity, I will take it. And and also I mentioned this in my presentation, that we also, beside of booster, we're continuously working on enhancing the stuff we have. And right now we're working, for example, on our compliance monitor to adjust it to the new MiCA rules for trading cryptocurrencies. And we're already talking with 2 potential customers with this. So this is also something looking forward where we get new revenue from.
And can you tell us a bit more about your competitive environment? So what are direct competitors?
We are so special, so we don't have direct competitors. So the strongest, if we want to call it competitors, is if a very big bank makes a strategic decision, and though that they prefer to use some internal solutions of our solution, this could be a threat for us. But fortunately, the people who deal with our solution are so happy with it and prefer it so much to deal with our solution than their own one, that we are usually the winner. And if you talk about Bloomberg, it's not a competitor. They are just a different case, right? There's incredible Bloomberg compared to us. If we look about smaller trading solutions, then they have their own niche, and we also have their own niche. So I don't have anyone who's really doing the same thing that we are doing.
And there's a question why your guidance for 2024, 2025 is so low. The booster expenses will be cancelled in the current year. So why should the results should actually rise compared to 2023, 2024 due to the elimination of lower booster expenses? So basically, yeah, why is the guidance so low in that regard?
Yeah, so there two things. So first, we have increased of employees, and that we hired already last year, but we have to pay them the full year right now. This is actually the cost for people is the highest cost that we have in general. So this is something. And yes, as I said, we lose some smaller customers that also have a small impact. And regarding the trades, that is a very significant part of our revenue. It's dangerous to predict too much there. So I'm pretty careful with my guidance.
And in what segments could you see additional potential in your software, and where could you add further add-ons to your software suite?
Yeah, the biggest thing is right now is crypto, regarding trading with crypto in general, and also our compliance monitor with the crypto capabilities. And of course, selling what we did with Booster also to other customers.
And how difficult is it to implement a crypto solution? It's probably completely different in terms of trading than stocks, or basically, how expensive is it to make a crypto solution?
It's not so much. It's we actually already did it with for one customers, but we can't announce it yet. So no, it's not so difficult. We have I think the biggest difference from my point of view are the partly executions. You know, if someone buys a full Bitcoin, for example, and usually the normal people, they have something I don't know, 5 steps behind the decimal point what they're buying or selling regarding a cryptocurrency. Then you have a lot of partial Teilausführung, partial transactions, and this is the biggest thing. One thing that we had an issue in the past was general the things that comes after the comma, but this we solved already.
Okay. And with the completion of the booster program, will there be space for other activities in the coming years?
Of course. So Booster was a little bit. So some of our developers had to work on Booster, so they're right now free for other stuff. But also in the last phase of Booster, the effort for our developers became lower and lower because we were also working together with an external partner. These were the external costs we had during this phase. So yeah, we can now focus more on the things that we do for other stuff than Booster. And the example I was just mentioning, like crypto, like the ECM for cryptocurrencies, that we already are working on, is part of this, that we had more resources to do all the stuff that we want to do.
Yeah, looking at the time, we are already, the time's already up. So thank you so much, Carsten.
Yeah, thanks for the opportunity.
And up
And
next
thanks to all the people who asked the questions. Thank you. Bye.